Indonesia's corporate sector has always been plagued with corruption, monopolies, and debt-driven growth. Throughout the many decades, a number of firms have gone from nothing to dominating a particular sector. What is known about the Indonesian corporate sector, however, is that it is still flourishing. From decades back until this very day, time and time again, we are seeing historical records from corporate profits to market valuation. But despite the many growth cycles the country's corporate sector experiences, there will always be failures. Bankruptcies are common, especially if they are plagued with criticism, controversies, and, most importantly, mismanagement. One case on Indonesia's bankruptcy list is a company that goes by the name of Asia Pulp and Paper, which is also understood to be the country's largest corporate bankruptcy. At the time of its peak, Asia Pulp and Paper was a dominant actor in Indonesian pulp processing and paper and board production. It has stated in official reports that it had an aggregate production capacity of about 3.8 million tons per annum, or approximately 50% of total Indonesian paper and board capacity. At the same time, it also owned two of the largest pulp mills, Indonesia and Lontar Papyrus. Far from Indonesia, the company was also the largest producer in the entire industry in Asia, excluding Japan. It was a key player, especially in China, where the country's consumption of paper and board products was booming. However, despite all of these successes, and the fact that Asia Pulp and Paper would also be listed on the New York Stock Exchange, it would be hit by a massive corporate issue. During the Asian financial crisis in 1997, the company would default on loans of over $13.9 billion. The default was reported as the largest debt default ever in the history of Asian markets. Hence, the once regarded reigning champion in Asia's pulp and paper industry would crumble down and would see a difficult time emerging back from its massive debt burden. Most people, if ever, would never have probably heard of Asian Pulp and Paper, and at the same time would never imagine that Asia's largest defaults would come from Indonesia. Yet it did. So just who is this Indonesian company? Who owns it? And is debt just the company's problem? Let us start from the very beginning. Asia Pulp and Paper was founded by two Indonesian businessmen, one of which was known as Eka Cipta Wijaya, the Chinese-Indonesian billionaire known as Sinar Mas, a large private corporation established in Indonesia. Asia Pulp and Paper, however, would be formally incorporated in 1994 as a firm established in Singapore. But the history of the company started way back in 1972 with Taiwanese investors, and it was only in 1976 that Sinar Mas acquired 67% of the Indonesia company. The established company in 1994 had only happened after Sinar Mas consolidated all of its pulp and paper operations by combining its ownership in Indonesia company and his business partner known as Jiwa Kimia. Therefore, the company, even though it was established back in 1994, was already a growing and formidable company around Asia. For the most part, it has a segmented leadership around the mid to late 1990s due to its aggressive corporate behavior. It spent a whopping $4.7 billion on capital investments around 1996 and 1997, and by 1999, the company's total paper and packaging production were more than 4 million metric tons per year. It had facilities across Indonesia, but most importantly, its facilities in China were massive. It entered China in the late 1990s, motivated by the rapidly growing demand for paper and board products. Their production facilities in China alone were over 1.2 million tons of paper products, and before its financial collapse, it was even planning to build a pulp mill with a capacity of over 600,000 tons per year in Hainan province. It was a massive company with aggressive leaders and greed for more. Yet this very strategy would not last, simply because its strategy was financed mostly by debt. It used debt to rapidly accelerate its expansion by borrowing more than $13 billion in the international debt market. The debt was even in the form of capital bonds and syndicated loans from offshore investment banks. Time and time again, it was seen throughout the corporate world how international debt had been poised to be a more challenging corporate burden than borrowing from local banks. Debt, however, is still understood and loved by many corporate managers. Driving growth through borrowed money has helped form many companies and even countries to where they are today. But whenever one takes in too much debt, it can then lead to problems, especially at a time when the world, or at the very least Asia and Indonesia, would come face to face with its biggest ever financial crisis. In 1997, the Asian financial crisis would surface after the Thai baht was floated. Global and multinational companies from South Korea to Thailand would declare bankruptcy. What led some of these companies to also declare bankruptcy? Well, they too, just like Asia Pulp and Paper, had too much debt. Some even have a lot of debt coming from international lenders. Interest rates would rise substantially, and even South Korea's once heralded giant Daewoo would fall from its engulfing financial crisis. However, Asia Pulp and Paper stabilized accounting and business operations throughout the 1997 Asian financial crisis. It was still growing, but despite having around $7.1 billion in outstanding obligations, they were protected. Its parent company, Sinar Mas, would pursue a strategy to protect its core assets as cited by many articles. They would, from 1998 to 2000, assume over $4 billion in new debt, some of which were short-term high interest rates, and a lot was used to fund the Asia Pulp and Paper expansion in China. But as time showed, their business and strategy would still become unsustainable. In the early 2000s, the Asia Pulp and Paper financial situation deteriorated drastically, led by the group's long-term obligations coming at due time, along with substantial short-term debt. In exactly September of 2000, the company applied to the United States Securities and Exchange Commission for approval to change the terms of approximately $2 billion in bonds. By December of 2000, the company's share price would finish the year at 0.54 a share, losing 96% of its value over 12 months. A month later, the New York Stock Exchange threatened the company that it would delist it. Month after month was challenge after challenge. Yet it was still the very beginning of its long battle. By February of 2001, its subsidiary in Indonesia would go on to miss a coupon payment, and by March, it would request the banks to reschedule debts and organize asset sales. In the same month, its Chinese company would also miss out on payments, and then, with no course of action, the company had to suspend all debt repayments. The deterioration was difficult for Asia Pulp and Paper, but it was also difficult for the banks that lent billions of dollars to the Indonesian company. It had accumulated debts of about $3.6 billion in China, $1.8 billion of which is owed to state-owned banks. Amongst the reason being, however, was not just due to the Asian financial crisis. Neither was it just due to the aggressive nature and debt-driven growth, but it was because of the sudden drop in pulp and paper prices. These unexpected occurrences had trampled down the company's underlying strategy, as they could have assumed that the prices of pulp and paper would continue to skyrocket until they did not. Fast forward to 2010, however, the company was still operating 5 of the top 10 paper mills in Indonesia. Its principal operations in Indonesia and China were producing 13 million tons and 6.4 million tons of paper on an annual basis. The company, until this very day, continues. It states on its website that it markets its products to over 150 countries. The company's revenue would continue to rise, and its total liabilities, as according to its balance sheet, have now dwindled. Its Chinese subsidiary, however, was eventually spun off in a debt-for-equity swap, and it has also agreed to repay its $7 billion in debt over the next 10 years, covering the debts of its Indonesian subsidiaries as well. Its stunning rise and fall and rise again would be great, but in most cases, it had taken the company years to fix its debt problems. A key learning insight, however, should have led the company to where it is today. Like most corporate failures, they have only become too greedy. And whenever the timing is not right, such as in the case of the 1997 Asian financial crisis, they may be dealt with unprecedented issues. But anyway, the rise and fall and rise again of Asia Pulp and Paper was spectacular, but it serves as a good corporate education for Indonesia. Do let us know what you think. Thanks for watching.